All right, and the second thing here is, how does settling a debt impact your taxes? Well, basically it doesn't, it kind of has a bad impact on your taxes, all right, to cut to the chase. So the difference between the total amount of the debt and the settlement amount will be considered taxable income. Okay, the IRS refers to this as canceled debt. They're saying, oh, well, this guy basically got money, right? Because he owed $10,000, but they only paid like $6,000 for it. Well, that basically means that he got $4,000 in income. Okay, I mean, that's kind of crazy because he didn't get $4,000 in income, but the IRS is going to consider that because they love tax and stuff, so they're going to swoop in. So they're going to tax it in the form of a 1099-C, essentially. So when the collector files that settlement, they're going to send notice to the IRS, and then they're going to send you a 1099-C reporting that as a taxable income. So if you get a 1099-C at the end of the year, you should be aware the IRS knows that you settled that. They're going to be expecting you to pay taxes on that, and you should pay taxes on it. Just as a reminder, the tax rates in the US go from 10% to 30% of gross income. They are progressive, so the more money you make, you'll be bumped up into a higher tax bracket. Right? So there are some exclusions to this, right? So student loans are a common exception. If you have a student loan that you settled or was forgiven in 2020 or beyond, then that's probably accepted and you probably won't have to pay taxes on that as gross income. Some exclusions include bankruptcy, so if you file for bankruptcy and those debts are erased in bankruptcy, those are excluded, you don't have to pay taxes on them. Or insolvency. So insolvency means that you have more debt than you have money or assets. So if you have like $100,000 in debt, but you only make $10,000 a year and you have no property, then you're probably insolvent, and you won't have to pay taxes if you settle that debt for like $10,000 or something like that. All right, so just as an example again, so if you have, let's say you have $10,000 in canceled debt because you settled a debt, you might end up paying taxes at like a 20% rate, just for the sake of ease of numbers. Which means if you're paying 20% on $10,000, you're going to end up paying $2,000. All right, that's totally like an oversimplification. That's just the general idea. Hopefully you're using like TurboTax or something like that so you can make sure your taxes are on the right page, right? All right, well, that's pretty much it, folks. Just as a reminder, you can go over to SoSuit.com. We can draft a debt lawsuit settlement letter for you. It's a super great letter. Make sure it has all of those things in there that you need. You can also use this to file an answer to respond to a lawsuit. You can use this for other stuff as well. So go over to SoSuit.com, check it out. And that's what I've got for you. Hope you liked the video. Took a lot of work.